experience with open banking and embedded payments. So things are hotting up now, starting to talk about the sort of more emerging areas that we're all using or testing with open banking, perhaps testing. We're noticing the lower cost of the open banking payments. And then embedded payments, there's some fantastic applications around. I'd like to introduce you to Jeffrey Barraclough. Jeffrey.
Good morning, everybody.
How are you?
It's great to be here.
So what are you hoping to get from today's panel? We've got now 40 minutes on this subject. You know, what's your sort of, what do you want the takeaways to be?
Well, I think we've heard this morning a number of panelists mention open banking and talk about their hopes or their aspirations for the technology. So it'd be good to hear from the vendors, but also from the merchants as to where they think this is in the UK now and when it might hit the mainstream.
And tell us a little bit about you, Jeffrey. And, you know, I can see, I looked at your LinkedIn, I stalked you, and, you know, I see you're involved with Techstars, you're on the Westminster Council Cabinet for Economics, you're doing quite a lot of different things. So tell us about your, you know, you.
I've done a bunch of stuff, but most recently, I worked in the software industry, supplying technology to retailers they used for CRM and eCommerce and point of sale and so on. And from that, spent 10 years in merchant acquiring, two of the largest European merchant acquirers. And then I took an unexpected detour into local politics in May 2022 and found myself with more political work to do than was compatible with a 9-to-5 day job involving international travel. So I spend the mornings doing payments, and in the afternoons I go to City Hall in Westminster, and I'm responsible for planning and economic development for the West End of London. So refurbishing Oxford Street is my biggest project. So I'm spending £150 million in total on regenerating that part of the West End. But I also publish a newsletter called Business of Payments, which focuses on European merchant payments from a vendor perspective. So how do you make money out of fintech? So Business of Payments, please subscribe, and hopefully it'll give you some interesting monthly snippets. There'll be some value.
And, you know, so you're involved with retail, you're involved with e-commerce, you're now involved with regenerating Oxford Street. Do you think we'll see a multi-channel Oxford Street in the future?
Well, I think that's the future of the high street. Oxford Street used to be a place with very large retail outlets where you went to shop because that had the biggest range. Everybody stocked the entire range in those stores. And that's not what people are looking for anymore. So it's much more a place where you want to have showrooms, but also we're much more, as a council, we're much more open to non-retail uses that generate footfall and give an active street frontage. So we've approved an art museum, for example, at the Marble Arch end. There's a model world coming into one of the old New Look stores, which is going to be Britain's biggest model world. And there's a National Basketball Association store open. Paris Saint-Germain have come in. So there's a whole stack of different uses. Much of it is about showrooming. Much of it is about brand awareness, and it's actually relatively cost-effective as a marketing strategy to have a store if a store's in the right place compared to paying Google.
Yeah, exactly. Anyway, without further ado, I'd like to bring down your panel. Thank you very much, Jeffrey.
Oh, thank you.
We'll see you in 35 minutes.
Welcome, everybody. Please come and sit down.
This one?
Yeah, wherever you feel comfortable. Please don't go too far away. So, welcome, everybody. We've got your names and photographs up there. I hope it's going to be readily apparent who is who. But we're going to spend the next half hour or so talking about open banking payments in the UK. So if I could start, Nadia from TrueLayer, if you could just maybe tell us, just so we start this discussion on a consistent basis, can you define open banking payments for us so we know what we're talking about?
Sure. So in its simplest form, open banking connects banks and third parties and technical providers like TrueLayer to either initiate payments or exchange financial information. So to translate this for today's purposes, it enables a merchant to add a pay-by-bank payment method to their checkout and allows consumer to initiate direct bank transfers to the merchant.
So as a consumer, what does the experience look like?
So speaking from the UK, compared to a full SCR card payment, an open banking payment is actually a lot smoother because at the point of checkout, when you choose the payment method, you choose your bank, you automatically get redirected to the bank's app that you have installed on your phone. It's a pre-populated form that shows exactly what you're paying, who you're paying. You approve it, and you get sent automatically directly back to the merchant.
So it works on mobile. Does it work on desktop?
Yes, you can use it on desktop. The way we operate is that we tend to send consumers still to their banking app by displaying a QR code.
And at point of sale?
It's possible, yes. We do that too. You can again display a QR code to the consumer in the shop to then pay with their mobile app.
Okay. So if I could turn to the merchants on the panel, Stuart and Richard. So you both work for large merchants managing pretty complex checkouts. So maybe you can give us your current assessment of where you think open banking payments are in the UK, and how excited are you? Maybe if I can start with Stuart.
Morning all. So yeah, we do have quite a complicated checkout. I think we're trying to make it simpler and less friction, I think, is the kind of the key buzzwords at the moment for us around the business generally, but certainly at checkout. And we've been looking at open banking now for about 12 to 18 months, just from a search and discovery perspective, trying to understand what it means for the business, what it means for the consumer. And I've seen a few of you at other events and so forth, but trying to understand what it really means in terms of the benefits that it brings. And for us, I think we will be implementing open banking and the web checkout this year in an effort to reduce friction, but also reduce cost of sale as well. And also looking at open banking in other processes around our business. So we have direct debit, for example, in the bus business, and looking at how we remove effort in the checkout.
So level of excitement, 1 to 10?
A good 8.
8.
A good 8. Yeah, a good 8.
So Richard, what's your assessment?
I guess I look at it from a different perspective because I'm predominantly fraud in Superdry, so I'm risk averse by nature. So new payment methods sometimes offer unexpected results. So introducing things like Klarna and other sort of things like that takes resource away because it involves responding to things. So my excitement comes from the potential of actually not having to deal with that, the after-sales part, because open banking in its current guise doesn't necessarily offer the option to dispute or do anything back towards us as the merchant. So it offers a safer route, a quicker route, less abandonment, hopefully. So it's a better experience for the customer, but also a better experience for me as the fraud person and as a business, because it won't take up any more resource.
But, sorry, is that not one of the drawbacks of open banking payments, which is I don't get any consumer protection? So
as a consumer, absolutely.
Yeah.
As a merchant, take it as you want. If that's the option that you choose at the checkout, there are other options. We'll still have cards, we'll still have PayPal, we'll still have Klarna. If you choose to use that option, then I guess that's down to the payment options being advertised correctly to make sure that the consumer is aware of the potential risks of using that option. As a merchant, I'm all for it. As a consumer, would I use it? I don't know yet.
Okay, and so how close is Superdry to implementing it?
It's still quite new. So we're replatforming our entire website at the moment, so it's something that we'll be looking perhaps towards in the next 6 to 12 months as we get those launched. So. And
your level of excitement, 0 to 10?
I would say it's a good 7.
Good 7.
Yeah.
Okay, brilliant. So let me turn to Peter from Ivy. you're experienced in more in the European markets. And of course, in some European markets, account-to-account payments of various kinds are very common in e-commerce. In fact, they're used much more than cards. What do you think the British can learn from Germany or from Poland, for example?
Yeah, interesting question. And maybe also just taking a step back just to quickly introduce myself. So I'm Peter, co-founder and chief revenue officer of Ivy. We built an API for instant bank payments. We're working from Berlin, Munich, and London. Have raised 30 million from great European and United States investors, and work with the biggest retail and e-commerce brands across SEPA and the UK. Just for the audience to have an understanding of what I'm doing. And coming to your question, I think what can the British people learn? I think there's three main things and stakeholders to consider when want to make open banking payments fly. And that's A, kind of the infrastructure, providers, banks. That's B, the merchant. And then C, the consumer that in the end pays. And I think what the continental European markets and the UK have managed is actually building a great infrastructure from the bank side. Nadia has described the flow, and it's indeed much, much easier than doing SCA with your card. Maybe not every merchant in the UK, but at least the two we have on stage, and obviously anyone that listens carefully is willing to test it from a merchant side and is eager to kind of implement open banking. So kind of the only thing that is left is the third party, which is the consumer. And I think here it is about to find the right use case and the right way to implement and kind of introduce instant bank payments, which is a lot around education. We had this earlier. It's a lot about finding the right use case, which might not be the checkout itself, but which can be a pay-by-link style use case to kind of pilot such a new payment method. And then obviously it's around kind of giving the consumer an incentive to actually pay with this method. So this can be actually a financial incentive, meaning a discount, which is actually very common in Germany, but not that common in the UK. So I think that's something that is very powerful and that I would love to see more in the UK.
Okay, so that leads me on to my first question, which is, we have a 20-year habit in Britain of paying for stuff on the internet with a card. If you look at behavioral economics, payment behavior is fast thinking. People normally pay for things in the same way they paid for them last time. They don't think about payments. So it's quite hard to break into that cycle and suggest to people a different way of paying, when the best time to tell them, hey, I've got a better way of paying, is at the checkout. And if you're a merchant, talking to customers at the checkout about things other than checking out is not really a very good idea, because you're going to end up with lower conversion rates. Hence, I think your point about incentives. So maybe start with the merchants here. How would you break this 20-year habit of consumers paying with cards?
I think, so one of the points I touched on, which was about ease of use for the customer, I don't think we'd tell them at one point, but direct debit, for example, is a good use case for open banking for us in terms of the effort levels that customers have to go to, and that we have to go to as well as merchants to set up a mandate, call for payments. We have a disjointed initial proposition, which is the first payments taken by card, the second is then set up, and the recurring payments thereafter are set up on a backed mandate. And actually, the customer didn't choose. They've chosen direct debit, but they've also chosen the source of funds for that direct debit to come from. But actually, open banking is just another way of doing that. So when they sign up to the terms and conditions, for example, to do with a direct debit, then there'll be, back to the earlier point, there'll be various terms there around to ensure the customer is aware. But I think their concern and their primary objective is to have a consistent and trusted method of payment, to know that their money will be taken in a secure, effective way, will be taken quickly, and that transaction activity will happen in the most efficient way possible.
So I get that today with a direct debit, and there's a direct debit guarantee, and I get a kite mark that tells me that.
Yeah.
With open banking, how do I know it's going to be safe and secure and so on?
Have to trust us. And I think I think you can create that. You can create, and I don't want to use the word illusion because it's not an illusion, but you can create that trust at that point with the brand, and at the point in which the product manifests itself at checkout. So I think the way in which you market the product and the way in which the monies will be taken, and just using language, language that is relevant to customers and that is that they're also frequently using. It was on a panel earlier about customers don't necessarily know the way in which biometrics or what biometrics were. Tiago from Dunelm was saying that, but it was around actually they're using it day in, day out. So they don't need to know that it's open banking, but what they need to know is what happens behind the scenes.
Okay, so let's come back to that, because I think that's a really interesting point. I just wonder if I can explore for a moment the earlier question about changing consumer behaviour and incentives, for example. So I don't know whether, Richard, you think about giving a discount or incentives to people who would be paying with open banking?
So, is this towards merchants or?
Well, I was asking Richard, but I mean, after Richard, maybe I was going to ask the two vendors on the panel, but let's start with Richard.
I think there is a slight change in consumer behaviours because of things like cashback and points and loyalty reward accounts, all those kind of things now. Me, as a consumer myself, if I can get cashback, if I can get points, or if I can get a discount code, those are the things that would attract me to buy it perhaps from one merchant. Even if I could buy it the same thing at two different merchants, if I chose one particular payment method and it gave me some money back, then that's probably where I would go. So as a merchant, that is definitely something that we would explore.
I mean, do you currently offer incentives to steer payment types
at
the moment?
Not currently, not in that sense. We do advertise certain payment methods in our sort of marketing content, in our emails and our social media posts and stuff. But that's more a behind-the-scenes type of thing because that's a part of the agreement. Perhaps when we launch our new websites and stuff, that will be something that we'll be able to do because that will be part of the package that will come with it. So, and I think that will drive different things. Someone mentioned it on an earlier panel about one payment method goes up or down and then another one changes. So if one goes out, I have seen it more on our European sites. If they're running a promotion perhaps themselves that we aren't necessarily aware of, that is used more often and it changes the way that people pay on our website. So it definitely does navigate people's ways.
So Nadia and Peter, from your experience with your clients, I guess both in the UK and abroad, how are you seeing merchants trying to break that ingrained consumer behaviour and incentivize them to try something different?
I think, so actually, it starts pretty soft, I guess. So I think, there's the scale of incentives and nudging the consumer from A to B is broad, and it can start with just implementing instant bank payments in the first checkout position and adding a recommended badge. And we've seen a 50%, share of checkout doubled. So it doubled by implementing Ivy in the first checkout position with recommended compared to having it in a lower position without this badge. And I think this is obviously rather soft, and then you can go over to linking instant bank payments towards a merchant-owned loyalty system and doubling loyalty points when paying with instant bank payments. This can be labeled as some kind of, let's say, Zalando Pay, or kind of in the branding of the merchant, which embeds it even deeper into its ecosystem. And then obviously we also built use cases where we as provider offer our merchants to allocate incentives of various kinds, may it be a discount on the transaction, which is a variable discount, or it can be just a fixed amount. Or we also have an incentive suite where we collaborate with ESG organizations, which we support by a transaction via Ivy. So I think the whole suite of incentives is broad, and you can get creative with it.
But interesting, just saying simply, it's the recommended payment choice gets you extra clicks. Nadia, what's your experience?
I think in general there's an overemphasis on consumer adoption. First of all, a consumer can't adopt something that isn't in the checkout. That's a good starting point. no consumer ever asked for Apple Pay or contactless. They don't think about payments as much as we do here. I think it's more about, like, is the consumer actually ready for this thing that we're putting in front of them? And if you think about how a consumer is familiar now with a different way of checking out anyway, from cards, first of all. They know there's another step in the journey. Not every merchant has a payment team sitting in the office, triggering all sorts of exemptions on card to be able to go through. So there's lots of SEA steps that are still triggered and a lot harder to do on a card than they are with a pay-by-bank payment method. Then, because of the pandemic, the majority of people now have the banking app on their phone. They know how to log into their banking app. And then, of course, there are generational differences in how people pay. The people don't have their cards on them anymore. They might not have a PayPal account. And for them, it's easy. And then it's, what we've seen, yes, incentivization is great. We've got some fantastic case studies with that. But actually, we've also had merchants that simply put the payment method in their checkout, and within a month, they got organically, without advertising it, without putting it at the top of the checkout, without adding a recommended logo, they got to 13% share of checkout, overtaking PayPal as a payment method. Why? Because it says bank in the name. They trust their bank. They trust the merchant, to your point. They're like, I can do this. I'm not going to have to get up and get my card out and remember the 3-digit number again. And what was the PayPal login again? It actually, like, we have some merchants that have 90% share of checkout for pay by bank, but we also have proof that you don't have to invest a lot in incentives to get to a pretty decent share of checkout.
Okay, if anyone in the audience would like to ask a question, if you go to the app, if you submit a question, it will come up on my phone here, and I'll try and ask it to the audience. Because it'd be good to get some, I think, some reaction from the very learned crowd that we have here on some of these questions as well. So let me move on and talk about the business model. So can I ask, so if this is a replacement for debit, shall we say, ask the merchants, how much would you be expecting to pay for an open banking transaction?
So that's well, yeah, nothing would be nice. But it's a really good question, because Pay by Bank, for me, I was first exposed to Pay by Bank with Cafe Nero. Probably about 18 months ago, they did a very short trial of Pay by Bank. It was buy one, get one free, and you sort of experimented with it. And so that sort of started my, if you like, if we're in therapy, that started my journey of open banking. But for me, at the time, the concept was that it would be cheaper. And then the suppliers came knocking, and we talked commercials, and actually it didn't appear to be cheaper. And so I think there's been a lot of sort of soul searching within the business, and particularly for me, around looking at the full cost of a traditional card transaction. And not everything appears as it may seem. So digging down and just talking to other merchants, but digging down into the true cost of card transactions, it's not necessarily the headline price and the brochure price that you need to look at. It obviously goes a little bit deeper than that. And then you can start to get a true balance between an open banking transaction cost and cost, life cycle cost of a transaction, not just the upfront, initial transaction fee. And then make an educated comparison to an open banking fee. And my challenge to our supplier community that we have was that I want open banking to be as cheap or cheaper than card. To make a business case and to be able to present that to our exec and say this is why we should be doing it, because let's be honest, it's not as simple at the moment or not as quick as a card transaction. So there is some element of friction, but it has other benefits to go with it, both business and customer. And so it was at or below card transaction rates, and we've got there. So that's
in terms of structure, would you be expecting to pay an ad valorem figure or a pence per transaction figure?
Yeah, it's a pence per transaction.
Yeah.
And so when we launch, we'll be paying less for our pay by bank than we will be cards.
Yeah. So, Richard, is that your view too?
Pretty much, in theory, it should be a simpler process. Therefore, there should be less involved in setting it up and carrying out the actual transaction. So why why should it cost more, at least, than a card transaction? So I totally agree that it should be cheaper.
So, Nadia and Peter, without giving away too many secrets, what's your pricing structures?
Okay, so I mean, I think first of all we can match expectations to be cheaper than cards, and I think it's very valid to expect this. I think important is what we also just heard is that you look at kind of end-to-end payment costs, and there is costs that is not related to the transaction itself, but that comes with kind of just people in chargeback teams and finance teams, needing time to fight chargeback, and this is obviously not the case with any instant bank payment. To put it short, I think there is use cases where you can save 10x on transaction fee with instant bank payments with Ivy.
So can you roughly how much per transaction?
I will not communicate any number here now.
Okay. If it's a pence per transaction, does that mean that it's going to be a better business case for high-value transactions and will probably be more expensive than cards for low-value transactions?
I would agree with this, and actually looking into our merchants, we work with Mytheresa, one of the biggest online luxury retailers with average order value in the high 3 digits.
Okay.
So I think that is right.
Nadia, can you reveal anything about pricing?
You're not going to get a price from me, I'm afraid. But I would say that actually it really depends on the merchant. Some prefer a fixed fee for a transaction, but particularly those that have a wide range of transaction values, from like below £10 to 4 figures, they actually prefer sometimes to have an ad valorem price instead. And I think open banking probably hasn't done itself any favors by broadcasting that they're so much cheaper than cards, because the reality is it depends very much on the merchant that you're speaking with, because enterprise merchants already have very, very, very good fees from their providers. And then it comes down to looking at the overall cost, right? Because
I've got some questions from the audience here. So what we'll try and do is maybe slightly quick fire. So I'll fire them out, and anybody who wants to answer them, please chip in. So why, as a consumer, would I choose to pay with open banking rather than Apple Pay and Google Pay? Who wants to take that one?
I can. First of all, not everybody has Apple Pay and Google Pay enabled on their phone. There is a limited market to that, and in some instances, that's where incentivization comes in. It actually still creates benefits for the consumer, and I think this is where the merchants need to really think hard about how they want to incentivize the payment method, because it's one thing putting the payment method in your checkout, but if no one's using it, you're not going to reap the rewards. And so, just an example from our side, like we have a merchant that sell gift cards online, they're called Jam Donut, and the only option to pay is us, or Apple Pay, or Google Pay, I suspect. But still, 90% of people choose TrueLayer or Pay by Bank because they get the right incentives, sometimes double the cash back on buying the gift card.
Understood. In fact, that one of the advantages of open banking should be that you can see how much is in your account before you authorize the payment. So actually, there is an advantage there. But I take the point about customer experience. Okay.
And just on that one, I think demographics as well has a lot to play. We've got quite an older, a big part of our demographic and customer range is an older generation. Senior coach cards are our biggest seller, outstripping students and so forth. So there is back to that trust piece, and certain demographics now using banking apps and mobile banking more so than ever, especially post-pandemic. There is a trust element there, and that generation are trusting that process.
That's a good point. So, next question. Banking limits. So, working in a high ATV sector, we find the banking limits problematic. What would your advice be on this? And we've got personal experience on this because my wife had to pay her tax bill, HMRC, and it was over £5,000. And there was a button that said Pay by Bank app. I know HMRC has been one of the biggest users of open banking. So, because I work in payments, I was saying, please hit the Pay by Bank button and see what happens. And what happens was she was pinged to her NatWest banking app that said, no, it's over £5,000, you can't do an open banking transaction. which wasn't something that was highlighted before she hit the button that said pay by bank app. So I'd be interested in your views about high ATV, but also your views around the fact that the customer experience is provided by the consumer's retail bank. So every customer experience is going to be different, and you don't know what that customer experience is going to be in advance because you don't know as a merchant which bank your customers use. So how do you cope with the fact that so much of this is in control of the retail banking app and you don't know what that's going to be?
That's no different to using your card, is it? You don't know whether the transaction is going to be accepted or declined for any various number of reasons, most of which, as a retailer, we don't often get that. So whilst not the same, it is a similar experience. But to your point about the limits, we had to pay something via bank app. And the experience for us, it was over £5,000 again. And it immediately gave us the option, do you want to change your limit? So we increased the limit and it went through. So it was
Which bank was that?
That was First Direct, I think. So to your point about, immediately not going through, but it did give us the option to change it, and then that one little extra step, it went through and it was perfectly fine. So that obviously is built into most banking apps, you would hope, to counteract some of that.
So that's a clever use by First Direct, and I think that goes back to my earlier point about we need the retail banks to get on board. Another example I've got is NatWest now. NatWest is probably the most advanced bank in thinking about how they're going to use this. They've got a pay-by-link product. Out of your mobile banking app, you can send a pay link to someone to pay you money. So again, got my wife to do this, paid us some money. I'm with Starlink. So I get pinged to Starlink, got to put my password in to my Starlink banking app. It won't accept my Face ID because it's a payment. Paid her £5, tried it again, had to go through the same authorization process again with Starlink every time, got to put your password in. So they haven't thought about this, I think, in the same clever way that the First Direct have. Next question from the oh my goodness, there's one question that's quite long here. I'll come back to that in a second. So consumer protection when paying on a credit card is a big thing for shoppers buying online, where things like non-delivery or incorrect goods or damaged goods being dispatched or received can be a big problem. Not all retailers are great at resolving these type of issues. If a shopper uses open banking, they have no protection if the retailer is not prepared to address the problem. How do you see open banking addressing this consumer protection problem?
So I see us giving kind of the consumer protection into the hands of the merchants, and obviously it's on us as a provider to only work with merchants that are legit in a way and that are capable of handling all their all consumer protection issues that come their way. But I see the absence of chargeback risk as a key value proposition of open banking to merchants. We had it earlier, and I think that this weighs more heavy than the consumer not being protected.
What is chargeback? You don't get Section 75 on a credit card either. So, I mean, it's Martin Lewis, money saving expert, would say, don't book a holiday using open banking.
I totally agree. Like I said to you before, as a consumer, I'm not sure I'm mentally there yet, especially for something of a higher value or that is worth something.
I would add a few things. I think first of all, I think it's a myth to think that there is no consumer protection when it comes to open banking payments. Because actually, if something goes wrong with a payment, like you're getting charged the wrong amount, it's double the amount or whatever, you can go to your bank and they'll give you your money back. That's that solved. And then on the chargeback side of things, or let's say something goes wrong with your purchase, like the examples that were listed in that question, I would probably ask every merchant here, and they would probably agree that they would rather the consumer go to them first than run straight to their bank and trigger a chargeback and take more control of the experience. And it's down to us as a provider to weed through the merchants that are really care about their consumers and want to give them a good experience and want to make them good. And of course, there will be instances where they cannot be made good, because if you share your account with your flatmate and they buy something that they shouldn't have bought, then maybe you shouldn't get your money back because you shouldn't have your shady log in the first place. I think the big gap that there is, and that's true, it's the insolvency element, right? So what happens if a company goes into insolvency? You mentioned travel businesses. Travel companies, like online travel agents, they pay their suppliers often with a card. So if that business goes down, they can claim the money back and they can make the customer good. Then you have APTA, the Association of British Travel Agents. When you buy a package holiday in the UK, you get a certificate that says if this company goes down, you're going to get your money back. And apart from that, like, we're actually about to publish a paper on exactly that, like, how can we make this payment method whole in the eye of the consumer? So in June, we'll be publishing a paper with our recommendations to take the next step to make the consumer whole.
So with that in mind, and we're coming towards the end here, but I'm curious, again, views from the panel. Do you think we need something in the UK that looks more like a scheme around open banking with an acceptance mark and some generally accepted rules and regulations so that everybody knows this is the button and this is what happens when I press this button?
I would say no. My opinion is that the power of open banking is that it is considered as a pay by bank. I log into my banking app, which I'm familiar with. So that's exactly kind of where the trust comes from. And it would be wrong to think that introducing a new scheme with potentially a new brand would help here.
I think as a consumer that they would want to know that they are protected regardless of how they paid. You know, I've been to a few of these things now, and part of the reason why customers and people that buy things are prepared to pay in a certain way is because they have the protections from credit cards and the chargebacks and the 675. So if you don't have anything, why would you use it? Well, you know, the introduction of the verification of the name on the bank account before you even pay someone to say, are you paying the right person? You know, that kind of extra check is something as a consumer I think we'll need to change that mindset and get them to go down a different road.
Stuart?
Yeah, I like the concept as it is today for the reasons, you know, that everyone else likes it, and that kind of agility that it has. I think if we were to introduce more structure around it, it would have to come with some sort of benefit to it. So that benefit would have to be sold in, I think, to merchants and you know, suppliers to say actually what benefit does it bring as a result of whatever legislation or standardization that gets brought in.
Okay, so we'll finish with one final question for you all, which is, do you think open banking payments will ever overtake cards for online transactions in the UK? And if so, give me a year that you think it will do that. And I'll start with Peter.
Yes, I do think that open banking payments will overtake card payments at one point. And this is what kind of the growth rates over the last years and exponential growth in adoption clearly indicate. I think it will not be in this decade that we have higher adoption than cards, but rather in the early 2030s.
Early 2030s. Okay, Nadia?
I think it's already happened in some of the instances. We have merchants that have entirely switched off cards already. For this audience here, eCommerce, I think it probably will take a little bit longer, but the ball's firmly in the court of the merchants, you know, if they want to reap the rewards and get their customers to literally reap the rewards, they just have to put in their checkout.
Okay, merchants, ball's in your court. Which year, if ever?
I do think it has the potential to. I just think it has to be sold to the customer in the right way. You know, the buy now, pay later thing, that has taken on a bit of a mind of its own, so for various reasons. So if they can encapsulate some of that, perhaps, in the way that they sell, then that has potential. And at least, you know, 5 to 10 years, I would say. So,
Stuart?
Yeah, I don't think it will in the short to medium term. I think there's still work to do on the experience. I think digital wallets will outstrip cards sooner, and then maybe pay by bank and those banking methods will come along maybe fairly closely behind it, but I think it will be probably second to those kind of more digital means. But if the experience can be simplified perhaps in the future, then there's no reason why not.
Brilliant. Well, thank you so much for your time. That was terrific. A lot of expertise on display. I hope that was of value to the folks in the audience. And I think it might be lunchtime.
It is lunchtime. So thank you very much, Jeffrey and panel. And we'll see you all back in an hour. So 1:30 for Marion King on open banking. Thank you.
Thank you.